Hi everyone, and welcome back to the channel. If you're new here, I'm Krista, and today we're talking about something that's super important for anyone looking to buy a house: how to save up that 20% down payment. I know it sounds like a lot, but with the right strategies, it's totally doable. We're going to break it down and give you a solid game plan. Let's dive right in. So, first things first, why is 20% the magic number? A lot of people think you need 20% down to buy a home. And while there are other loan options with lower down payments, putting 20% down has some big advantages. Let me break it down for you. Number one, no PMI or private mortgage insurance. If you put down less than 20%, you'll have to pay PMI, which is an extra cost added to your monthly mortgage payment. That's money you could be putting towards your home instead. Better mortgage rates. A larger down payment usually means a better rate, which can save you thousands in interest over the life of the loan. And if you have some additional cash, paying down your interest rate is an option a lot of people don't realize that they can use too. And number three, more equity. The larger your down payment, the more equity you start with, which is awesome for your long term financial health and even selling your home in the future. So, yeah, while there are options for less than 20%, putting down 20% is a really solid goal to aim for. All right, let's talk about how much you actually need to save. The first step is determining the cost of the house you want. So let's say you're eyeing a $300,000 home. To get a 20% down payment, you'll need to save up at least $60,000. Now I know 60,000 does sound like a mountain, but trust me, breaking it down into smaller, manageable chunks does make it more achievable. Now that you know the total amount, the next step is setting a timeline. How long do you want to take to save? The average person takes about 5 to 7 years to save for a down payment, but you could certainly do it faster with some focus. Let's say you want to save up that $60,000 in 3 years. Here's how you can break it down. 60,000 divided by 36 months equals $1,667 per month. If you save weekly, that's around $385 a week. You might be thinking, that's a lot of money. And yes, it is. But remember, there are ways to cut back and find extra income, which we'll talk about in a second. So now you're thinking, where in the world do I find $1,667 a month? Don't worry, I've got you covered with some tips for cutting costs. Here's where you can start. Number one, track your spending. Get into the habit of tracking every dollar. Use apps like Dave Ramsey's Every Dollar or YNAB to get a clear picture of where your money is going. It's really eye-opening to see how small daily expenses do add up. Number two, cutting out the small stuff. That daily coffee shop habit, if you cut it out and make coffee at home, you could save about $150 a month. That's $1,800 per year. Number three, refinance or lower your bills. Look at your subscriptions. Do you really need all these streaming services? Can you maybe lower your car insurance or negotiate bills? And number four, eating out. Eating at home more often can save you hundreds each month. Plan your meals, buy in bulk, and prep your lunches instead of eating out every day. By cutting out some of these small luxuries, you'll free up extra cash to put towards your savings. Next up, let's talk about increasing your income. Saving isn't just about cutting costs, it's also about finding ways to earn more money. Here are some great ideas. Number one, side hustles. There are so many options these days. You can drive for Uber, freelance, tutor online, or start a small business. Every extra dollar can add up fast. Number two, ask for a raise. If it's been a while since your last pay increase, it might be time to have a conversation with your boss. A small bump in your salary can make a big difference over time. Number three, selling unused stuff. Go through your closets, attic, or garage and sell items you no longer need. You might be really surprised how much money you can actually make just by decluttering. These extra income streams will help you hit that 20% down payment goal much faster. And here's another pro tip for you: automate your savings. Set up automatic transfers to a separate savings account every time you get paid. In that way, the money gets moved before you even see it, so you won't even be tempted to spend it. Treat it like a non negotiable bill. You'll be amazed how quickly your savings can add up when you're consistent. And don't forget about your credit score. A higher credit score can help you secure a better mortgage rate, saving you thousands in the long run. To boost your score, number one, pay down your debt. Try to limit your credit card balance to 30% of your available limit. Number two, avoid opening any new accounts during this time frame. And number three, pay your bills on time every single time. Having a strong credit score can make your path to home ownership much easier and cheaper. So there you have it. Saving up 20% for a home down payment is totally achievable if you set clear goals, cut costs, increase your income, and stay disciplined. I know it might seem like a lot, but remember, small, consistent actions every day will get you there. If you're in it for the long haul, you can absolutely make your dream of home ownership a reality. Thanks again so much for watching. And if you found this video very helpful, don't forget to hit the like button, subscribe, and share it with anyone who could possibly use these tips. I'll see you in the next video. Good luck with your savings journey.